factor is 3 times the prime rate. If you do something 3 times the prime rate, half the people will stop asking questions and the other half will start. And it's too good a deal for the kinds of people I'm coming after. I want people that have $50,000 per share, in a share. I want to sell up to 2 shares, and I want to sell at least 1 share. So I want either $50,000 or $100,000 out of my partners. I figure I can raise 1.2 million people. 1.2 million. And I'll raise $1.2 million with just a handful of people. But I can't offer it to them at 30%. You know why? It's too good to be true. If something's too good to be true, the kind of people I'm talking to will just make that assumption. It's too good to be true. So they won't invest. What can we do? Claude, we got to leave the parking lot out of the deal. He said, what do you mean leave it out of the deal? I thought we got it, the parking lot. I said, I do have the parking lot under contract. He said, well, how do you get it out of the contract? I said, I don't have to. I'm going to sell that part of the contract that includes the building to the partnership that we're forming, to the LLC that we're forming. I'm going to sell the parking lot to me and you. He said, for how much? He's worried about how much money he's going to have to put in the deal. I said, for $1. At the time, that parking lot was assessed for $615,000. Right now, it's assessed for $1.2 million. 1.4 million, I'm sorry, $1.4 million. We got it for $1. But we got the internal rate of return down to 21 or 22% or something, so that it was an easy sale. It was easy for people. It was good enough to be attractive to the kinds of people we wanted, but not too good that it violated the greed factor. So that, it's really strange to be telling you this, but it's probably going to be true in your lifetime as it was in mine. It has been more than once, that you can't offer a deal that's too good. It's really hard to get people to buy a bad deal. Somehow it doesn't seem as hard to sell them a bad deal as a really good deal, though. You don't want to make the deal too good. Okay, you've heard about one way to find the hidden market. Now, what is the hidden market? Well, what's the open market? Yeah, anything with a sign on it, anything in MLS, anything that's in LoopNet. If you're looking at commercial properties, most of them are not in MLS, but they're in LoopNet or other CCIM debt. That's the open market. Anything that's for sale is in the open market. Okay. If this is the universe of properties, the universe of properties, I think I've got that in your book. The universe of properties in Orange County, California, which is where we are. Orange County last year had 375,100 individual property parcels, of which about, I will tell you, 70,000 or so are commercial properties. Okay? That's in your book. Which page are we on? 28? Okay. If this is the 375,000 or the 70,000 commercial properties I'll talk about, this sliver represents the properties that, well, let's see, it's kind of a tough market. Maybe this sliver altogether.